Hello, everybody. How's it going? Didn't know if I'd do one of these today. I'm exhausted. I woke up early this morning, and this won't be very long. I think I'm going to take care of my kids in 20 minutes. So I got about 20 minutes. This shouldn't take longer than 20 minutes. Let's get right to it. I don't know why the Olympics are on the back because I'm not watching the Olympics. Let me turn that off. This has been an interesting quarter because when the numbers hit and I saw what the top line was, and I saw what quarter one guide was, I was very concerned. Again, not because I thought the company was like 0 or something, but because I thought the stock would go down a lot. And then as I saw what the profitability will be for next quarter and the language that quarter one will be the bottom of the supply chain issues, I kind of jumped off the ledge, or did not jump off the ledge. I've been drinking since 12:30. So, but let's get down to the details. So the numbers that, just to be clear, okay, the company used to guide quarterly to handhold analysts because this business is impossible to predict. And they have not done that in a year. So before January 6th, the numbers were actually much higher for quarter one and for 2022 and for quarter four. And they took them down, sell side, after the commentary on that quarter one call. I mean, on that January 6th call. So the fact that top line is going to be so significantly below the already brought down numbers is disturbing, and it would be even more disturbing if it wasn't for how profitable the company is based on this impaired revenue. So they did 32 cents a quarter in Q4, and I believe if you just look at the guidance for Q1, the revenues are a few million less than Q4, and they always beat. So I'm sure that's conservative. And gross margin is at or probably a little bit above Q4 gross margin. So they should do, again, they sandbag everything. So they should do low 30s in earnings in Q1, at the very least high 20s. The street's at 21 or 22 cents. So if you put Q4 and Q1 together and you assume this is the worst of it, which is an assumption you have to make, doesn't mean it's right, then, and again, Q3 is a seasonally high quarter, and Q2 also is higher than Q1 and Q4, then you get to something north of $1.20 in earnings run rate right now based on this supply constraint. Tax rate will have to be changed a little bit going forward, so they'll knock a few pennies off of it. But you're looking at an $18 stock with 6 and change of cash, and it's crazy how cheap the stock is. Basically, either management is completely lying to us, which they can be, and there is no supply constraint, and the business is in a perpetual decline. I'm just talking about the display side. So I'll tell you where your margin of safety is in a second. But the display side is in a perpetual decline. The display side of the business was down 50% 2019. 50%. It's hard to reconcile that with just supply. But if you couple that with oh, I lost my train of thought. If you take this as the trough and you're doing over $1 in earnings on a $12 a share adjusted for cash stock price, and you assume that they will grow earnings at some point in the future. Now, mind you, management has guided to growing 2023 revenues for the whole company at something like 30 or 35%, because that's the only way you get to CAGR of a double-digit CAGR over those 3 years. If they're even half right, earnings will explode next year. They have design wins. They have products coming on board at the end of this year and next year. It's not just kind of all pie in the sky. Your margin of safety basically comes down to, there's two businesses here. There's the power business and there's the display business. And I don't know what either of those things do. Power business could be what charges my iPad at night. That could be the power business. And the display business could be the laptop I'm looking at right now. Though actually, I know that's not the display business, but I'm just being clear that I have no idea what this company does. So when my kids watch this one day, like 50 years from now or 30 years from now, and they want to know where all of our money went, they can know that I put it all in a Korean semiconductor and I have no idea what they do. Absolutely no idea. Anyway, I went on a tangent there. But seriously, you can't take management for real. Get the fuck out. Is you take them for real, David, that there's no supply constraint? Or, I mean, you have to understand, this management is also sandbagged for years. So either they sandbag or they're lying about future growth. I don't know. It can't really be both. I'll give you a perfect example. So they came out of last quarter with their gross margin at, I think it was like 37% or something. And they basically told the street January 6th and then Needham that gross margin was not sustainable. It was a result of kind of a one-time price thing, whatever, yada, yada, yada. Then they put up this number. And guess what? The gross margin this quarter and the gross margin next quarter is basically effectively the same gross margin as quarter three. So they just flat out lied to everybody about what their gross margin was going to be, but not in a bad way, in a good way. They downplayed it, and then it was better. So that's a good lie, right? So if they're lying, and they also regularly, before all this happened with the pandemic, they would sandbag quarterly guidance, constantly sandbag quarterly guidance, and then beat it, destroy it. So you have to remember, they haven't put out quarterly guidance in over a year. So this quarterly guidance is put out now for Q1, I assume is being sandbagged, and they'll do 5 or 10 million, probably better than that number they put out. And then with that gross margin, you get to whatever, the 30 cents or 32 cents or 33 cents in earnings for next quarter, which is 50% better than the street was at. So, it's an interesting predicament here. My dog needs to come in. Come on. Why don't we play devil's advocate for a minute? Let's say that MagnaChip has lost business, significant business. I don't know what the number is, but let's say they lost, whatever, a quarter of their display business. Let's say they lost half the display business. I mean, we know the supply chain's real. That's not it's an industry-wide thing, so it's not a MagnaChip thing. But let's say some of this business is gone and never coming back, okay? If you believe that they've had design wins, whether it's the car manufacturer in Europe or it's the Chinese display maker, or the rest of the design wins I talked about, the revenue that's been lost, that's over with. And you can see what the gross margin, the profitability is today as a result of today's business. And I was about to talk about the power side of the business, which has been surging. And that shows no impairment. And they even say that has supply constraints. And that's growing. It has grown rapidly. Amazing. Over the last year. So I'll remind you that the article that came out in the Korean press in mid-January said that they're selling the company, or they're going to try to sell the company. And if they don't get adequate bids for the whole company, they might split it up in power and display. And your margin of safety can be any number of things. It could be in the fact that it is the power business is thriving. I have no idea what that's worth. And the display business, which is still in decline, but you have no idea what the actual number should be there, is probably the result of the gross margin surging. So it's very hard, almost impossible for me to see how you get an impairment here at $18 a share, given the fact that you're dealing with a $12 adjusted stock price and well north of $1 in earnings on current, I'm talking current, like Q1 guidance, run rate earnings. And I can assure you that the company would not have put that line in that said that Q1 is going to be the bottom. It wasn't going to be the bottom. All they've done is been conservative in the history of their earnings releases. And if they really are undergoing a sales process, then they need to be as transparent as they can be while they're communicating to potential buyers. So it's kind of a mixed bag, I guess. I thought the revenue would be better, and it wasn't. The profitability is all still there. You know, you look at the stock market right now, revenue does not buy diapers. Earnings do. And the companies that are making money, that are making revenues, and then it's not transitioning to the bottom line. They're going down 30% the next day when they miss top line by a few percent. MagnaChip's trading down like 3% right now in after hours, with a gigantic top line miss and a top line Q1 miss. Why? It's because of everything I just told you. Dude, David T, you are bothering the shit out of me. You are going on ignore. I want you on timeout. That'll be fun. My God, I can't fucking talk with you with your bullshit. We got it. David T thinks the stock's going to $14 to $16 in the near term. If MagnaChip gets to $16 in the near term, I will do a thong YouTube. I said this on Twitter, where I come on here in only a thong. It's not going to happen. It's not going to happen. So I don't think you have any idea what you're talking about, or you have any idea if you understand the company. This is not a typical stock, not a typical company. This is a Korean semiconductor company that is overcapitalized, that there's industry-wide supply constraints. I'm not making excuses for them. For my first reaction when I saw the numbers was that I'm fucked. But there's a bid now at 18 for 3,200 shares. If I thought that the stock was going down, I would hit the bid for 3,200 shares at 18, wouldn't I? I'm not loyal to anything, just to my money when it comes to stocks. So I got no reason to bullshit. And, you know, David T, you should short the stock at 18, my friend. Maybe you are. But the narrative here, if you're a private equity firm and you believe even a fraction of the thesis that the company is pitching, and a lot of this played through in the numbers, whether it's the power side, Maisie, please, whether it's the power side or the gross margin with the decline of revenue on the display side, the thesis is pretty simple. In the very near term, and any private equity firm can do their own due diligence on this if it's true or not, especially a South Korean one, they would know immediately if this is true. We'll know that 2023 and 2024 are going to be fucking insane. So they don't care about a quarter or next quarter. That won't even come into play when it comes to the auction. They'll care about whether or not the display business really is going to rebound. And the company had some interesting comments about the specific fab or chip that they're dealing with now. Something like 90% of their revenue now is a specific 24 nanometer or some bullshit. And it was like 30% in 2020. So I'm guessing you could do the research on that nanometer, and it will tell you that they can't be secured right now. It's the weirdest lie you could ever tell. If when they end 2022 and start 2023, and there's no revenue growth. I think I only have 5 minutes. Yeah. Hold on. I'm going to watch a kid while I do this. My wife needs me to watch a child while I do a YouTube because she's picking up my daughter at school. So this will be interesting. It'll be more fun this way, I think. Yeah, it's very hard for me to understand that somebody would have a thesis that the business is not only impaired but going lower in the future, given what it's done in the last 4 weeks. So to me, your next 4 months is a setup that we've been waiting for, which is basically Q1 is going to be, they're going to beat whatever they just put up now. They're going to guide a Q2 that's better than, I guess, better than last year, or at least better sequentially than Q1, since Q1's the bottom. And then at any moment between the middle of April, beginning of April, and the end of June, the company could be sold. You know, they will probably make a full-on effort to sell the company starting now. They've probably been doing it for the last 4 weeks. And oh my God, David, shut the fuck up. Go fucking start your own YouTube, you fucking idiot. How do I get rid of this guy? Oh my God. Why don't you learn how to spell the word you? It's Y-O-U, you fucking idiot. God, people in this business are the fucking worst. Of course, I don't care if you disagree with me. Go start your own YouTube. Go fucking write up about how you think MagnaChip's going to $15. What are you possibly saying that's productive to this conversation? Companies liar. No one's going to buy them, and it's going to 14 to 16 year term. You think that's helpful to anybody? You do no analysis. You're upset that MagnaChip hurt you one day when you were a child. I don't know. Of course, I'll follow people who disagree with me. You're wasting my feed, ruining my YouTube. I'm the fucking star right now, not you. Go start your own YouTube. MagnaChip sucks by David T. Is this the same David T that follows me on Twitter? I'm fucking gonna block you on Twitter. I don't think it's you. There's no way it's you. Oh God, you got me on the wrong fucking day, dude. Maisie is an adopted dog from Mexico that none of us have any idea what she is. Oh, I have to watch my language now. Hi, buddy. Come here. I get both of you? You're going to leave me one of them, right?
Leo just decided to come in. All right, let's say bye, Dad.
Bye, Leo. Hey, buddy. That's an owl. Oh, no, it isn't. That's not an owl. Oh, my God. I'm a bad parent. It's a moose. Let's see. I don't even know how to do this. Wow. That was fun. Thanks, David. I swear there's no way that's the David that follows me on Twitter, because he's like the nicest guy in the world. But now I'm really curious. not possible. Yeah. So that's where I am. Right, Sam? You want to come up my lap? Listen, there's no situation where I would stick around with a stock that I thought was going to go down. I've been very clear. Look, I sold all my Groupon out. I'm not doing this for 20 years. I'm not owned to anything. In this market, this is the kind of stock I want to own, right? This is not getting multiple compression from 20 times sales to 5 times sales. And it's completely just out of the box. It could not be less correlated to the rest of the stock market. So whatever happens in the near term. I'm really not that concerned about it. I don't think the people that own this are that concerned about it. And Toronado is the largest shareholder and added 400,000 shares last quarter and owns 2.5 million shares, and it's their biggest position. Oaktree went up to 4.95% and owns 2 million shares. And then passive funds own another few million shares. And look, they have to sell the company. So we'll see what price they get for it. But it's a very undemanding valuation if you believe in a fraction of the thesis. And if you don't believe in the fraction of the thesis, if you think the business is going to zero, why you think that? I don't know. You should get the stock. Scott, what's your Twitter handle? Is it S. Weber? I need to know what it is. What you doing, buddy? Oh, I love the rise that guy just got out of me. I swear, I don't think there's no way that's the David that follows me on Twitter. He's the nicest guy. People are so funny to me. Like there's some sort of this is a free exchange of information or a two-way conversation David and I are having right now. David can start his own YouTube. And as you all know, I'm more than fine taking any question you have on here about anything. Any pushback you have at anything, please bring it to me. I'd love to hear it. Always like to hear it. My gosh. I think that's everything on MagnaChip. I would love to hear. I'd love you guys to explain to me where we go wrong going forward. Power business is stable and growing. So unless you think that's going to go down for some reason, if it wouldn't have already went down last year with the whole China overhang, instead it went up. So you can't claim that the power business has anything to do with the current weakness. And then on the OLED side, it's already been decimated. The business has been decimated. Okay. So if you take the decimated business they have in OLED and display, and you, this is so cute. There's my wine. Uh-oh. Where are you going? What's up, buddy? You take the decimated business in OLED, and you take the power business, and you get to over $1 a share in earnings on a $12 stock with a process that's going on and a company is willing to sell themselves. They ran a whole process to sell themselves. And I'll remind everybody for the 18th time, that $25 today is the same as, $29 today is the same as $25 in March of 2020. $29 today is the same as $25 in 2020. So you don't need the same purchase price. It can be a significant discount. A butterfly. That's a butterfly. Yeah. Glenn, you could probably make the assumption that Samsung's already pulled all their business, if that's what was supposed to happen already. I mean, you can see it on the OLED side, but they also said that they secured a win. They literally said they secured a win from a major Korean cell phone manufacturer in Q3 or Q4 of this year. So if Samsung's still adding them as a manufacturer, as a contractor, And I'm pretty sure Samsung's not going to wine. That is wine. Yep. Samsung's not going to pull all their business. And if you know the way the business works is they can't just yank all the business. Hey, Matt, thank you for your review. Do you think they need $29 plus a buyout? That actually is the best question, Justin. It really is the best question. And yeah, it's great. And to me, Justin, that is your single biggest risk. Your single biggest risk is that the board and the management do not have the, they won't accept face for taking less than $29 today, since that's what they got last time. But I'll remind you, like I just said a second ago, that 29 today is the same as $25 in March of 2020. And the CEO that is correct, Jake. Almost all the CEO's wealth is in this company. His options and his stock. He's never been in another company at the position he's in here. And he's got hundreds of thousands of shares and options. He definitely wants an exit. And of course, we're looking to a P firm. He'll make even more money. And every shareholder wants an exit. So I think the company would take $25 or $26 or $27 if they got it with certainty. But I could also see that if the company really believes in the 2023 plan and the highest bid they get is $25, which is 21. You're going to stick in here with me, hanging out with me, which is $21. They wouldn't sell the company. And you can't own the stock just for a sale. I owned MagnaChip well before they were sold, just to remind everybody. I didn't get involved in this for M&A originally. I'm very disappointed with the capital return plan. I got to make sure my kid doesn't kill himself. Hi. I'm disappointed with the capital return plan. I assume that's all a result of the fact that they are doing this process. And, you know, Chris, that's not true. My son is absorbing what it's like to be a bag holder right now. And you can't teach that. You have to feel it in the bones. Sam. You gotta stay here, buddy. Come here. Come here. Come here. That's okay. That's okay. Come here. Oh, no, don't do that. Don't do that. Come here. Oh. Okay. Oh, boy. Look at this. Look at this. Look at this. Huh? Look at you here. Huh? Okay. Where do you want to walk to? Where do you want to walk to? Where do you want? You want a baby bum? Yeah, I'll put baby bum on for you. Come here, baby bum. Come here. Come here, baby bum. Baby bum. Hold on. I'm gonna put TV on for you. Hold on. This could be the greatest YouTube that's ever existed on the internet, by the way. I don't know how this doesn't have 20 million views by the end of the week. I mean, what you're getting everything with this YouTube. Hold on, I'm putting baby bum for you. Just give me a second. Mom's idea. It's a good idea. Hold on. I'm putting it on. Hold on one second. Baby bum? Yeah? Okay. Ooh, there it is. Now I got to talk through baby bum. Oh, Josh, Kid Dynamite, you missed. I got in a huge fight with someone on here too, who I had to block or something. You know what it's like when I block people, right? Hold on, let me write this down. What is your S Twitter? All right, hold on. Hold on, guys. All right, let's see what we got here. Maisie picking up with Leo laying down outside. Sam laying down outside. Did Maisie eat something, Jake? Uh-oh. Speaking of Twitter, did I block the block? Next to comment, click more, then option should be to block comments and record a new term instruction. I tried to do that. It didn't work, Glenn. Where are the cat people? Seriously. Does not like MagnaChip. Yeah, Sam does not like MagnaChip. I'm a few minutes behind, but the best part was when Sam came in and you tilted the camera up. Great. So yeah, last thing on MagnaChip, and then I'm going to get to AXSM real quick. I seriously don't know how you have an impairment from $18 from here. Let's assume display revenue never grows again. It just stays at the Q1 levels. You know they're bringing on more capacity, and you know they're getting more customers. So clearly it's going to grow from here. It's not going away. If Samsung was leaving them as a customer, they would have disclosed that. Well played, CDM. What is CDM, Bill? I have no idea what that is. Bill, what's CDM? No, he was saying outside. Hello, buddy. MX was good to me. Thanks for the idea. Any idea where the gross margins are beating anticipation? I understand the CEO's response. Hey, Perry. They've never done this kind of numbers before in gross margin. So they used to do it in the mid-20s kind of thing. And then the world got upside down last year. And then gross margin surged. And then in January, when they put out long-term guidance, they said they will consistently be above 30%. But they downplayed the idea that it would be as high as 36, 37% in the near term after doing that in Q3. Okay, you should go listen to the conference call on January 6th. And now they put out these numbers and the revenue disappointed, but the gross margins are very elevated. The short reason for that is they're selling a mix of higher margin product while they are supply constrained. So as supply comes back, gross margin is going to decline closer to 30%, but revenue is going to surge. So it's fine. Their explanation of capital return by using the cash for supply chain should look up. Everything they said about the capital return is bullshit. I believe none of it. First of all, they don't need $100 million in cash in the balance sheet. Okay. Before this year, they used to have net debt. They had 200 million of net debt, 300 million of net debt, no cash, and they operated just fine. They sold their foundry business, and all of a sudden they have hundreds of millions of net cash, and now they say they need 100 million on the balance sheet for customers, and they might spend some money on supply. Believe none of it. But the good news is that that's not a sign of them, of weakness. You could see what they did last year in Q3, Q4, and Q1. While they were in a sales process, they did not return any of that capital. There was no buyback. There was no dividend. They just got sold for $29. So the company has a playbook, a history of how they act during a sales process. They still went to conferences. So none of that's concerning to me. Am I disappointed with it all? Of course, who wouldn't be? All they're doing is returning the capital of the breakup fee. All right, they should be giving us back a lot more money than that. But they're going to sell themselves, so I assume they don't care. Is that the most capital efficient way to do it? I don't think so, but that's what they did last time. So it is what it is. I don't know what I can't get in the board of a South Korean semiconductor. I got it, Jake. Well played, CDM. Wow, CDM. Bill, is Chris DeMuth famous enough to where he's known by an acronym? CDM? I didn't know that. Impressive. Am I MT? Anything else on MagnaChip? And then I'll go to AXSM. But yeah, if anything, this was a clearing event to me. So if the stock, I'm already I have over 50% of my portfolio in this. Well over 50% of my portfolio in this. And I don't recommend any of that or recommend any stocks to anybody. But I just look at it as a very de-risked company. Like I said, that's how I size positions. And you've got the, whatever, near $7 a share in net cash. And If it will get me on your Twitter, you can have MT. Bill, did you tell me what your handle is? AXSM. So they presented today, and everything was going great until the CEO said that they haven't entered into formal labeling discussions. And then now there's all sorts of debate what that means. So I still own a huge position, but it's all June call spreads. I sold all my March call spreads today. I sold my small common today. And I have a 13% delta adjusted position in June call spreads. Delta adjusted position, for you guys who don't know, is when you take an options position and you transcribe it to how it acts like a stock. If you own the stock, as the stock goes up and down, how much money you'll make and lose as it goes up and down on a daily basis. Forget about a binary event where it goes up 50% or 100% or vol changes and all that stuff. That's what delta adjusted position means. So it's a 13 or 14% delta adjusted position, which is huge. But of course, I won't lose that much money because it's all options. But it kind of represents what the risk is. And no, dude, that's the controller. I need something else to play with. You can play this. You can play with that, yeah. Mask. Super cool. Look at that. Check out Sam with the mask. So I thought all the language from the CEO and AXSM and all the disclosures to me reinforces that the product's going to be approved. It's hard for me to reconcile that with lack of formal negotiations. Oh, Charles is here actually, which is great. Charles is the AXSM X. So he gets all the blame and all of the credit if AXSM works or doesn't work. But I still really like it, obviously. And the reason why I like it is it fits the bucket I like in biotech, which is the traditional biotech analysts hate it because it doesn't check any of the boxes they like. It got the deficiency letter or whatever you want to call it, that their deficiencies preclude marketing, and it missed its PDUFA date. People don't like that it's two generics put together. All the things that would keep a traditional biotech analyst from wanting to touch this thing are the reasons why I like it. Because I did a long AXSM YouTube. You can find it in my channel. All the other data points to me point to approval. And the fact that we haven't gotten a CRL yet, almost 6 weeks after the company gave their response to the CMC, speaks even more highly to probably an eventual approval, because it's pretty easy for them to CRL. It's much harder for them to approve. And they're so far behind as it is. Ooh, someone just came in at 18 on MX. MX is now 5,000 shares bid ask with a nickel spread. That doesn't even happen during regular trading hours. So you can buy or sell 5,000 shares a nickel apart, and nobody has done that yet. I'm guessing someone's going to hit the 1795 bid, but it hasn't happened yet. It'll be really interesting to see what the sell side does with this news. I mean, I don't care. It's 3 people at Chop Shop brokerages, but oh God, what a day. Any other questions? Sam, do you have any questions? You done with Baby Bum? You want to come up here? No? Bye. Bye. Oh, man. All right. Anything else, guys? I keep talking. My wife's going to be home soon with the other 2 kids. I don't think that the board could turn down anything north of $25 a share in MagnaChip. 25 or higher from a private equity firm, I think they take the sale. That's what I would think. And then 25 again is like 21. And just to remind everybody how I get to that, it's $1 plus a breakup fee. It's $1 in the accretion of the buyback, 90 cents or so in the accretion of the buyback. And then all I did was roll numbers forward 1 year. So I did a 10%. I added 10% in value of the company a year later. The SMH is up like 15 or 20%. So to me, that seems kosher. Sam? There you are. Hi. No. We're hanging out in here. In here. We're staying in here. You can open the door and close the door. It's fine. I think, to me, that's the singular thing I think people are missing with MagnaChip, is that they're not realizing that $29 is not $29. Two of those things are not even debatable, right? One's the 90 cents accretion on the buyback that's going to be done at the end of quarter one, and the other one is the $1 plus breakup fee after tax. It's like $1.50 actually. Those two things are not debatable. That they are not. If you want to do apples to apples at the $29 before to now. And then, of course, you have to roll numbers forward. We've had inflation. Inflation in the last 12 months is 7%. So, shit, wouldn't you roll the equity price forward 7% just based on that? Cursed in front of you. Right? Look at this guy. He got his first haircut last week, right, Sam? Yeah. Hi. You want to push? Okay, you can push. So let me ask you another question. I'll pose a question to you guys, okay? Let me pose a question to you. What brings the stock down from here? So they're going to report next quarter. They've literally never missed a quarter, I believe, when they've guided. In the last 3 years, when they actually guide a quarter, they've never missed before because they just sandbag. Remember, the quarter's halfway done already. So next quarter will come in at that high 20s, low 30s EPS, okay? And they'll beat the revenue by a few million, okay? And then they put that language in this quarter about how this is the bottom. So for you to think that this is not the bottom of the stock, you need to believe that quarter two, something will happen in a material way that they didn't anticipate that makes that not true. And then you have to believe that significant display business still comes out of the business after how much has come out already in the last year. And I don't even know what your downside is from there. That doesn't mean the stock's at zero or something. It just means you have downside or you don't have as much upside. It's just amazing to me. The setup is so ridiculous. And I'm even saying that after a shitty top line and a shitty top line guide, because somehow the company keeps pulling out magics out of the hat with their gross margin. The gross margin saving the thesis for the near term. What is your thesis in Ocular Therapeutics? Do you mind sharing? I don't own Ocular Therapeutics in my own account. I have a small position in the other account, a family account, and I'm a complete tourist there. You can go outside. I'm piggybacking a friend who loves it, and it's part of a larger basket of biotechs I own in this other account that are just really beaten up biotechs that have tons of cash, that have no capital needs, that I think have the potential to rebound as much or better than XBI over the near term. That's probably my least favorite of them, and that's why I don't own it in my own account. But unfortunately, that's the best I got for you with Ocular. You know how it's been a Twitter darling, as you know, and it hasn't worked at all. But I think it's interesting given how capitalized it is. I think their current business is growing, pretty rapidly. And I think they have a few decent options in their pipeline to create value over the next year and a half. And you have an aligned management team. So that's why I own Ocular. But I much prefer Unicure, which I have in my own account. Obviously, AXSM is a huge binary. And those are the only real ones I own in my own account. Where are you going, buddy? Come here. Okay. You want to be outside? Mom's home. Yeah, buddy. Oh, yeah, you can't go here. Come on, come here. Oh. You gotta go outside. Stay inside. Oh, come here. Oh, look who's here. Perfect timing. He wants to go outside. Oh, yeah. Oh, boy. That has to go down, no question, as the most non-traditional FinTwit YouTube of all time, I think. There's no way anything can top that. Between me drinking, the dog licking herself and driving me crazy, and then a dog. Josh just told me that Sam banging his head on the floor. I'm sure child services won't come for you. I didn't actually see him banging his head on the floor. Does that sometimes. I think he was okay. I think I get like a solid C+ in parenting there. No? It was all right. He seemed happy until the end. He was trying to go outside and go up the stairs. What am I supposed to do? I have to get him. Right? Yeah. Come for the Korean semi, stay for the adorable children. Yeah. Amen, my friend. All right. Well, you guys are sticking around. I don't tell you. I can keep talking, but I don't have anything else to talk about. I haven't done really anything else to my portfolio in the last week. Oh, I did put in 2 new positions. I guess I could tell you them really quick. Zendesk and Momentive Global, MNTV, they own SurveyMonkey. They're in a deal to merge, and they're not going to merge. Nobody at Zendesk seems to like SurveyMonkey. So that deal is very much dead. And there's an activist at both companies. And I put on option trades in both Zendesk and Momentive, betting that they're both sold in the next 6 months. And on Zendesk, I sold put spreads to buy call spreads. So I sold 190 July put spreads to buy 125, 135 call spreads. There was a few different spreads I did. But basically selling 190s to buy 125, 135s. I also have some 120, 140s. And I sold 95, 75s. I had to pay a little bit of money for those. They weren't free. And then with Momentive, I've bought July 2022 50s call spreads for I was paying 60 cents. Then today I was able to buy them at 40 cents. The thesis is very simple with both of these. So with Zendesk, there's been a public bid for the company by a consortium of private equity firms. It came out last week. The range was 127 to 133. The company said no. And Jan is about to run a proxy, take over half the board. It's hard to know what these companies are worth anymore. I don't invest in shit like this. I only like to invest in shitty Korean semiconductors. But these high multiple companies, I have no idea what they're really worth. And it's not what I do. Growth. I'm not really a growth guy. But my general thesis there is that if you had a recent bid in that range, that's only basically what it was trading at back in November, which again was before all these companies went to shit, that you'll eventually get a sale there in the 140, 145 range. And that's why I put that on. With Momentive, there was multiple private equity firms that wanted to buy them north of $25, 3, I believe. And again, business has gotten a little bit worse. and the market has gotten much worse. So I believe they will be in a very tough position once this deal breaks. They're going to get $1 a share in breakup fee. So if they could sell themselves for $23 or $24, that's like selling themselves for $22 or $23 versus the $28 that the private equity firms were going to pay before in October. It's a 25% haircut. I believe those private equity firms still want to buy them. In fact, the most important thing that happened last week was that when Zendesk announced that they had a hostile bid from these private equity firms, hostile is not really the right word because they're not going hostile, but it was a unsolicited bid. The private equity firms said that they were okay with the Momentive deal going through. They said they would still purchase Zendesk even if Momentive was acquired at the $28 a share. Whatever the equivalent would be at $130 a share in stock. This is because one of the private equity firms that was bidding for Momentive, I think it's bidder A in the proxy, is part of the consortium that wanted to buy Zendesk. So it's my belief that they are fine with that deal, and they might even acquire both companies separately and put them together, which is pretty funny considering the fact how angry Zendesk shareholders are at the deal. So I have a pretty decent options position in both. In Momentive, I have like 100 basis points in call spreads, but they're paying 5-1. And with Zendesk, I have the equivalent of like a 7% delta adjusted position, where most of it's in these combos where I sold put spreads to buy call spreads. So unless Zendesk blows up below 100, which definitely could, of course, by July, I won't make or lose anything, but I'll start making money in the 120, 125 range, and I'll cap off at like 135, 140. So look at that. You guys stuck around for a little longer, and I had new ideas for you. That's the only thing I put on the last couple of weeks, I believe. You could hear all my children out there. I probably should go say hi to my family. Yeah, that's all that I did. All right. So anyway, I want you all to go to sleep tonight, and I want you to tell me where the event path with MagnaChip goes wrong in the next 6 months. It could be that there's no sale, and then come August earnings, they guide for a crappy second half. But I don't even know what that would entail. What would that be? They have capacity coming online, which we know about, and the power business is and has been booming. So it has to uptick, the display business. The only question is, does it uptick to 30% plus next year, 40% plus next year? It doesn't have to for the stock to work. So I don't know. I'm just befuddled. And look, I said I'm not too concerned about the stock. I'm more worried about Interactive Brokers hiking my margin to 100%. All right. I'm gonna go find out if David T is the guy that follows me on Twitter. Love you all. Take care and have a nice night. Bye.